Homeowners insurance is a financial safety net designed to protect one of the biggest investments most people will ever make, their home. At its core, it is a contract between you and an insurance company. You pay a premium, and in exchange, the insurer agrees to help pay for the covered losses involving your home, your belongings, and certain legal liabilities. Homeowners insurance is not meant to cover every inconvenience or maintenance issue. It is meant to protect you from sudden, unexpected events that could otherwise create a major financial setback. A standard homeowner's policy generally covers 4 main areas: the structure of the home, personal property, liability, and additional living expenses. The structure portion, often called dwelling coverage, helps pay to repair or rebuild the house itself if it is damaged by a covered peril such as a fire, windstorm, hail, or vandalism. It typically includes attached structures like a garage and may also cover built-in features like cabinets or flooring. Separate other structures coverage applies to things like detached garages, sheds, fences, and sometimes pool houses. Personal property coverage helps replace or repair your belongings, furniture, clothing, electronics, appliances, and many other items. If they are damaged or stolen, liability coverage helps protect you if someone is injured on your property, or if you accidentally cause damage to someone else's property and you're found legally responsible. Additional living expenses coverage, sometimes called loss of use, helps pay for temporary housing and related costs if your home becomes uninhabitable due to covered loss. Understanding what homeowners insurance covers requires understanding the idea of perils. A peril is the cause of loss, like fire, theft, or wind. Some policies list specific perils that are covered, while others are written on open perils, basis for the dwelling, meaning everything is covered except for what is excluded. Personal property is often covered on the named perils basis, unless you add extra coverage. Exclusions matter as much as coverage. Many homeowners assume their policy covers any kind of water damage, for example, but that's often not true. Water damage from a sudden pipe burst is commonly covered, while flooding from outside water rising is usually excluded and requires separate flood insurance. Earthquakes are typically excluded as well, requiring a separate policy or endorsement in areas where that risk exists. One of the most important decisions in homeowner insurance is choosing the right dwelling coverage amount. This should be based on the cost to rebuild your home, not the market value. Market value includes land value and local real estate conditions, while rebuilding cost reflects materials, labor, and construction costs. In high-demand areas, a home's market value might be far above its rebuilding cost, and in some areas, it can be the opposite. If your dwelling coverage is too low, you could end up underinsured and forced to pay a large portion of rebuilding costs yourself after a major loss. Many insurers provide replacement cost estimators, but it is still worth reviewing the assumptions, especially if you've renovated, added square footage, or upgraded finishes. Another crucial detail is whether your policy pays replacement cost or actual cash value. Replacement cost means the insurer pays what it costs to replace damaged items with new ones of a similar kind and quality, without subtracting depreciation. Actual cash value subtracts depreciation, meaning older items receive smaller payouts. For personal property, replacement cost coverage is usually more protective, though it often costs more. Some policies also have extended replacement costs for the dwelling, which provides extra coverage above the stated limit if rebuilding costs spike after a disaster. This can be valuable in times of inflation or widespread catastrophe when labor and materials become more expensive. Deductibles shape how your policy works in practice. A deductible is the amount you pay out of pocket before the insurer pays the rest. Higher deductibles generally lower your premium because you are taking on more of the risk. Many homeowners choose a deductible they could comfortably pay in an emergency. In some regions, especially those prone to hurricanes or windstorms, policies may include separate percentage-based deductions for wind or named storms. That means your out-of-pocket costs after a storm can be a percentage of your dwelling coverage limit rather than a flat dollar amount. Understanding these deductibles before you buy is important because they determine how much financial pain you'll feel after a claim. Liability protection is often overlooked, but it is one of the most valuable parts of homeowners policy. If someone slips and falls on your property, if your dog bites a guest, or if you accidentally cause damage to someone else's home, liability coverage can help you pay for legal defense and settlements up to your limit. Medical payments coverage, a smaller component, can pay for minor injuries to guests, regardless of fault. For many homeowners, increasing liability limits is relatively inexpensive. People with significant assets often add an umbrella policy, which provides additional liability coverage above the homeowners and auto policy limits. Homeowners insurance also includes many limits and sublimits. Certain categories of personal property, like jewelry, watches, fine art, collectibles, firearms, and cash, often have low coverage limits unless you schedule them separately. Scheduling means listing specific high-value items on the policy with appraised values, which can provide broader coverage and lower deductibles for those items. If you own valuables, reviewing these limits can prevent unpleasant surprises after a theft or loss. Claims history and risk factors influence your premium. Insurers consider the home's age, construction type, roof condition, proximity to fire hydrants and fire stations, and local weather risks. They may also consider your credit-based insurance score in many states. Older homes with outdated wiring or plumbing can cost more to insure. Homes in wildfire zones, hurricane-prone coastal areas, or regions with frequent hail can have higher premiums and stricter underwritings. Some areas have limited insurer options, higher deductibles, or special state programs. Because these conditions can change, homeowners sometimes need to shop around periodically. Homeowners insurance does not cover maintenance or wear and tear. If your roof leaks because it is old, that is typically not covered. If mold forms due to long-term moisture problems, it may be excluded or limited. If termites destroy wood framing, it's usually considered a maintenance issue. Insurance is meant for sudden, accidental events, not gradual deterioration. This is why preventative maintenance, roof inspections, plumbing updates, clearing gutters, and addressing small issues early can reduce risk and help you remain insurable in stricter markets. When a covered loss occurs, the claim process typically starts with documenting the damage, taking steps to prevent further damage, like tarping a roof or shutting off water, and contacting the insurer promptly. An adjuster evaluates the claim and estimates repair costs. You may be paid in stages: an initial payment, then additional payments as repairs progress. If you have a mortgage, the lender may be involved in claim payments because they have a financial interest in the property. For major claims, homeowners sometimes choose to work with a public adjuster or contractor who helps negotiate estimates. But this should be approached carefully and ethically. It's important to understand how insurance interacts with your mortgage. Lenders typically require homeowners insurance and may require specific deductible limits and coverage levels. If you have an escrow account, the lender collects premiums as part of your monthly payment and pays the insurer when the bill comes due. If you let your policy lapse, the lender can buy force-placed insurance, which is usually more expensive and provides less protection for you. Keeping insurance current is essential to protect both your home and your loan. Homeowners insurance can be customized with endorsements that broaden protection. Common endorsements include sewer or drain backup coverage, which can help pay for damage from backups that standard policies may exclude, water service line coverage that can help with underground pipelines, equipment breakdown coverage that can help with certain mechanical failures, identity theft protection, and home business endorsements are also available. The right endorsements depend on your home's characteristics and your lifestyle. Ultimately, homeowners insurance is about resilience. It provides the financial capacity to recover from disasters, accidents, and liability claims that could otherwise be devastating. The best policy is not the cheapest. It is the one that provides appropriate rebuilding coverage, realistic deductibles, adequate liability protection, and endorsements that address your specific risks. A thoughtful review once a year, especially after renovations, major purchases, or changing market conditions, can ensure your coverage keeps up with your life and the true cost of rebuilding.